The Nigerian Stock Exchange All-Share Index closing 2020 as the best performing stock exchange in the world, recording a growth of 47.2% a day to the end of the year. We're going to find out what that final figure is when trading ends today. The return, which is the highest annual growth since 2013, is the most among 93 equity indexes tracked by a Bloomberg. The NSE All-Share Index, which opened the year at 26,842 points, soared to 39,512 as at Wednesday, while market capitalization jumped from 12.9 trillion to over 20 trillion naira. Now, the Nigerian equities market has been riding on low yields in the fixed income space and renewed interest by domestic investors to outperform other global markets. So, what does this mean for 2021? How are investors going to be putting their funds? Joining us to discuss this further is market analyst Muktar Mohammed. Muktar, you're very welcome. Thank you so much for joining us.
Thank you. Compliment of the season.
Compliments on the season to you as well. Okay, so I can imagine a lot of investors are going to be happy about this, but is this to be celebrated, or should we put this world-beating return into context? How do you see it?
It's called for celebration.
Calls for celebration?
Yeah. From 2013, that was the last time we had a market like this.
Right.
It calls for celebration. It calls for a lot of cautions also because of the fundamentals of the economy. But in terms of the market, I think it calls for celebration, especially when you have a year, 2020 is the year of the pandemic.
Yes.
And it's the year of low economic activities. And here we've seen the Nigerian market doing so well, better than any market in the world. That calls for celebration.
Okay, fine. As you just said, the fundamentals of the economy not being reflected in the stock market. Muktar, some are calling this, I'm calling this a bubble.
No, it's not a bubble.
It's not a bubble?
It's not a bubble.
This is not a stock market bubble?
No, this is not a stock market bubble.
Okay, go ahead. Why is that?
Why I say it's not a bubble
Right.
is you need to look at the stock market itself.
Yes.
Sometimes has a life of its own.
Yes.
It's part of the economy.
Okay.
It's just like, I normally use this analogy. You go to some places in Nigeria, you see very good roads.
Yes.
You go to some places, you see very bad
roads. Okay.
So the economy is always mixed. Even if you say the stock market is not it should be a reflection of the economy, then you need to look at those sectors that are doing well, and then look at the larger economy, what those sectors are adding to the GDP. Then you realize that it's not every sector in the stock market that is doing very well. It's those sectors that are even reflecting their performance in the GDP of the nations that are doing very well. Unfortunately for us, those sectors are the blue chip companies.
Yes.
And those sectors are also the sectors that are driving the economy, even in the year of the pandemic. Those sectors were not sectors that were shut down during the pandemic. So when you look at that via the microeconomy indices, then you realize why the market is not a reflection of the economy. But when you look at the NBC data, you will now realize the market is actually a reflection of the economy.
We should have some roundtable debates where we have those who are calling it a bubble on one side and those like
I would have loved that.
We should. Okay, we've seen foreign portfolio investors who aren't able to repatriate their funds, recycle some of those funds back into the market. There's, of course, the central bank restricting funds going into OMO bills, which has caused these funds to now flow into the market. Between foreign portfolio investors recycling funds back in, and this also on the OMO side, with fixed income flows, fixed income interest rates going down, do you see this continue to play out in 2021?
I need to make a correction.
Okay, go ahead.
If you look at the data that came out from the Nigerian Stock Exchange recent, you realize that foreign portfolio investors actually withdraw about 422 billion out of the market.
Okay.
In response to last year, that they withdraw about 482 billion.
Okay.
So now, let me tell you why I believe this is not a bubble, why I feel this drive will last.
Go right ahead.
Because it is driven by local investors.
Yes.
Local institutional investors. With the kind of withdrawal that I've just talked about from the foreign investors, if that kind of withdrawal without the participation of the local investors, you would have seen a depressed market by the pandemic.
Yes.
So this current drive that we are seeing is driven by local investors. So what it means is that the local investors are beginning to take ownership of the market, are beginning to see the market as an opportunity to grow their wealth. Now, yes, you could say it like you talked about the OMO own, then you talk about the treasury, the fixed income phase.
Yes.
The returns in those space have been very appalling. And most local investors and even institutional investors used to play the fixed income space.
Yes.
So they now see that return in that space is more or less like negative compared to inflation. So they were looking for where to make other good returns, then they came to the stock market. Now, where you see the market goes up, then you see it comes down, is because most of those institutional investors, local institutional investors, local investors that are playing the stock market are those investors that are also short-time players.
Right.
So they don't stay long. So they come in after 2-3 months. You know, they normally do 90 days. They normally do one. So they are not going to stay there for long. So definitely we see there are ups and downs in the market because of profit taking. But the fundamentals of the people that are investing in the market, as long as this yield stays like this, which with the current economic reality, it seems like it will be like that through 2021. We'll see a lot of the market. And I like adding the crypto. If we get it right in the exchange regime volatility, which is holding a lot of foreign facility investors from coming into the market, if we're able to get it right and stabilize that space, we might see a bullish run that we've never seen before.
Even though you've given me the numbers on the withdrawal from the market, you still do admit that foreign exchange issues are playing a role in FPIs.
I'll be lying if I say foreign exchange are no issues. There are issues. You could look. What would have happened? Would have seen higher return than what we are seeing if the volatility was not, if the exchange rate was stable.
Yes.
And then you have the local investors and the foreign investors looking for where to invest their money, then you would have seen the bullish run, the return would have been higher than what we're seeing. Right. But if the local investors can drive the exchange to give a return of 41.something%, then you imagine what would have happened if the foreign investors and the local investors were struggling to take hold of the market.
Okay, fair point. I want to ask you about sectors, sector performance. Banking was about 12 year to date. Banking about 12.4%. Cement about 98% year to date. Telcos 107%. Food about 5.9 or so. If one is looking at 2021 with fund allocation, do you use the performance of these sectors as a clue to 2021?
Yes, I think so. You see, that's why I told you that if you look at the NBS, you realize that the banking sector, the telecom sector, the cement sector, the food sector, after the reopening, where they were those sectors that boost the GDP to even when the government is not so happy that we might be able to get out of recession. Because of those sectors. So if you look at going forward, will anything change in those sectors? It can only get better for the sector, especially the cement sector. We are going into a year whereby we see government doing
Muktar, you're a bull. You're a real bull. You're a bullish. Go ahead.
We are seeing a lot of people will be playing the infrastructure. Government is trying to do infrastructure. They will play this one. The banking sector is always the catalyst of any economy, in any country's economy. Once we are coming out of recession, you begin to see the signals through the kind of fund that comes in, the kind of fund that goes in, and those funds will pass through the banking sector. The telecom sectors, the world has gone digital. So we will begin to see more digital economic space in Nigeria. We're even expecting that more telecom companies may be listed. Some internet companies may be listed that are beginning to look at data as a means of communication. They might also be listed. So when you look at that food, you have the challenge with the food because of some policies from government here and there. We might not see so much in the food sector. But the only thing that will work for the school sector is the kind of interest rate that they will kind of fund that will be finding into those sectors, which was going to be at almost 0% because the government is looking at food sufficiency.
Right.
So that will help the numbers that will come from that sectors. So fine, I still believe those sectors will still move the economy.
In 2021.
But one sector we should also think about that might move the economy in 2021 will be the oil and gas sector.
That was down almost 43% this year. Yes. The oil prices were low.
And we are seeing the recovery. Even our benchmark is above $10 barrel already.
Yes.
So we are seeing the PIB bill may come into play. Then we'll see an improvement in terms of investment in that sector. So we'll see. So
you're optimistic on oil and gas for 2021?
I think I am very optimistic about that sector because of if you look at even with the second wave, no economy is trying to shut down completely.
Right.
So definitely that sector will still play a role. Remember again, next year we'll see the second round of oil block allocation also.
Right.
We'll play in that sector also. So oil block allocation will play in that sector. So definitely I think that sector will do something. But the other sectors that we could look at again, insurance sector. If they get their recapitalization on
There was a court case that
There's so
withheld
much
Nikon
court
from
case
doing
and
that.
everything.
Right.
Because of the penny nature of that stock, that's a stock that people can use to build wealth. But because of the penny nature, because of the recapitalization issues, if you go to develop economies, the insurance sector is the drivers of those economies.
Right.
In terms of population, you need to insure this, insure this. But again, that has to do with our weak structures because people just do insurance. 90% of Nigerians do only car insurance.
Gotcha.
So and they're not doing it because they want to do it. They're just doing it because maybe the policeman, the security agent will stop me on the way and say, do you have a car insurance?
Gotcha.
So that's a challenge.
Muktar Mohammed, a bullish market analyst, thank you so much for joining us on the Global Business Forum. Appreciate your insights on the stock exchange.